Hey, TikTok, Jim Malone here, coming to you live on Dallas Trading Floor. I'm also on Periscope at pscp.tv /Dallas Trading Floor and on YouTube at youtube.com/Dallas Trading Floor. So here we go. It is like a Tuesday, I guess. Yeah, it's Tuesday. So it's the market it's backed off a little bit, but it's moving nicely. It seems like we've got some really good action on the market. And just wanted to kind of get into it with you. Basically, really don't have a whole lot today. Mainly just questions, but I do have a trade of the day, which I think that you may really, really be interested in. And this will produce about, it's a little over 100% for 9 days. So that's pretty good. Basically, the market direction today, it's up. We're still in an uptrend. It looks as if it did fall a little bit, but it's looked like it's taking back to the 1,000 mark on the NASDAQ. And the Dow Jones is down, the S&P is down, but the overall market is up. The NASDAQ is up. So basically, this is a bifurcated market. What I mean by that is that, we're seeing the movement of funds into basically the NASDAQ 100, and that's really represented by the QQQ. So it's really important that if you're going to be in the market at all, and I definitely recommend that because it's a great time to be in the market, it's best to be in the stocks that are in the NASDAQ 100. That's because it just seems to be holding up better than the other indexes, better than the Dow, which is basically only 30 stocks. That's the Dow Jones, or the or the S&P. Here's the thing with the S&P. The S&P is the broadest index, and it really is. I concentrate on the S&P because that's one of the ones that really gives you the most in terms of the most breadth. But here the problem with the S&P 500 is that the S&P 500 basically has a lot of financials in it. A lot of small banks, regional banks tend to be in the S&P 500 index. Nothing wrong with that, but they typically are not high performers in a low interest rate environment like we have now. So, about a third, the bottom third of the S&P 500 really is not a place that you really want to trade. Maybe you want to, you might want to do some long-term investment there, but trading it is probably not the greatest idea. Now, I have somebody, hey, Earl, thanks for, wait a minute. What's your plan on offering trade? Thank you very much. I am trying to put together a little program just about training. I just wanted to kind of, put it out there. I am going to offer some training. Now, I trade a little bit differently than most people do. I trade for cash, which is, there's different ways you can trade. You can trade for investment, which is great. I mean, if you have, long-term money and you want to put it in there, I mean, the way to do that is to buy a nice index fund like the Spider or the QQQ and, set and forget. And as long as the market is in an upward trend, you're going to do well. But you can realize cash income. And that's really kind of what I'm about is, getting that cash income and kind of turning it into not really a job. I mean, this isn't really a job. This is just a way that you can make money and you can make money from anywhere. I mean, when I travel to Asia, I take my laptop with me and, I make money there, and I'm on vacation. I come back here and make money here. And, people are kind of surprised. That a guy came by my desk today and he was kind of shocked at what I was doing, but I could really, it's really not all that hard to make make your money work for you and make your money work hard. I want to show you just really quickly. I'm going to be putting this out. This is on my trade alerts, but I kind of want to show you this one. This is a kind of an easy trade, I think. It's a 9-day, it's basically a 9-day trade. And I'm just going to show you. This is a company called Vertex Pharmaceutical. and it's really it's a tremendous stock. It's basically kind of in the it's kind of in the right spot. What I try to do is I try to select stocks that are probably going to move to the next level. They're probably going to move up based on the chart patterns and that. And then I put really short trades on them. And this one, this is basically a 9-day trade. This trade ends the Friday after next. And, obviously you can't predict the future, but there's a very high likelihood that this will be successful. Now, this is a little pricey, I'll be honest with you, but, what we're trying to do here is we're trying to create income, consistently, month in, month out. So basically today's date is the 17th, right? And basically this is 9 days until expiration. Basically, the reason I'm interested in this company called Vertex Pharmaceuticals is because it has a very top composite rating. It's a 99. You can't get any better than that. That is your best rating for a stock. It's a 99 composite rating. Its earnings are due basically on the 31st. So I don't typically like to hold positions through earnings because, even if the numbers look good, sometimes they can change. But typically, between earnings is when you want to be in a particular issue, because that gives you that gives you the best kind of risk reward profile. So basically, I'm in it before the earnings. Okay, the earnings for this Vertex Pharmaceutical 731. This has been doing extremely well. Now, here's the things that I look at to see, is the stock ready to pop? I'm only interested in getting into it right before it's going to pop. I'm selling the expectation that it's going to go higher. So we have very good earnings per share increase, 125%. The 3-year growth rate on the 78%, excellent. And most importantly, the earnings per share estimate percentage change in the current period is 67. So we're looking at something that's it's very top rated and it's probably going to go up. Now, I'm not interested in holding this stock for a long period of time. I just want to get in, get the bump, get out, and then I want to go to the next one, kind of rinse and repeat. So if I were to do this one today, and I probably will, I may be beyond the close, but I may do this one tomorrow, just depending on how it looks, sets up. But basically, all you have to do this one, go in, you purchase 100 shares of stock. I know this is a little expensive, $28,080. I'm going to try to do these with some lower price ones. I typically like the higher ones because the higher the price, typically, the less the risk. I know that sounds very strange, but in terms of percentages, that's what I'm playing, is the percentages. So you go in, you have to have about $30,000 in your account, which is significant. But if you have margin, you can do this literally with less than that. And then go in, purchase 100 shares, and then immediately go and sell an option to buy the shares back from you. And in this case, I'm going to be selling an option. Did I put the? Yeah, I didn't put the in my. Goodness, I didn't set this one up right. Basically, what I'm doing is I'm selling an option to buy it back from me. Basically, at almost what I paid, a little bit more. I'm going to sell the 28. The 282.50 option. It pays $420, and then there is so there's a $420 between where I bought it and where the strike price where the strike price of the option is, and basically that's the 282.50 option on this, basically expiring in 9 days. So if this exceeds 282.50, which is not very much, it only has to go up a very small amount. It only has to go up basically 1.5%. If that happens, the option is exercised. I get the 2.1% return on the option. I get the 1.5% on the upside, total of 3.6. But if you analyze, that's 146%. So here's what I'm trying to do here is I'm trying to make very short trades, where the options are optimal. And I'm going to be selling the option. I'm going to be buying the shares. I'm going to be selling the option. And then hopefully it will go up enough where the shares will be bought back from me. Now, if that is not the case, if the shares don't go up that much, I still get to keep the option prices. So my consolation price is $599, whereas the total win would be $1,019. Now, why am I doing this? Well, I'm doing this because I want to turn over my capital. I'm kind of like a little store. I only have a few things to sell. I just have the best stock to sell, and I sell them. You can buy it this week at this price, the next week at that price, and not really very much longer than that. And by doing that, I'm turning over my assets very, very quickly, and that enables me to generate cash every week. So just wanted to show you that, and that's one of the ways that's one of my trading methods that I use basically to generate very good returns. So let's see. I'm gonna click off this one. Oh, did I get it right? Yeah, there we go. Exit. Great. And go over here to the questions. Let's see. I have let's see. I have some questions. Oh, great. Thank you, man. Let's see. Hopefully everybody likes cash out there. You see, because here's the thing. There's a difference. You can invest, which I do all the time. You can invest for for long-term gain, and that's great. But here's the problem. A lot of people, they take their hard-earned money and they invest it in stocks, and then it goes up and then it goes down and then it goes back up and it goes back down. Well, does that really help you? Does that give you more cash? What I'm trying to say is that I think you should trade for cash. So I trade on a weekly basis, meaning that I start on Monday, I find out where I can generate cash by Friday, and then I start the process all over again. So that's probably what I'm looking to do. I'm looking to find the chart patterns. I'm looking to find the stocks that for a short period of time are probably going to go up. And that's kind of how I do it. So if you're interested in that kind of thing, you can get on my alerts list, and I'll send you out kind of, I'm trying to put this out there to everyone so that they can see it. I'm trying to show that this is really easy to do. I mean, it doesn't take a lot. I mean, there's a lot smarter people out there than me, but a lot of people, they try to buy the bargain stock, and that's great. Buy the bargain stock. Sometimes the lottery tickets pay off, but basically, what I'm looking to do is I'm looking to make the money consistently, time in, time out, and that's kind of how I trade it. So let's see. What is the expiration date? Okay, great. Well, I'm glad you put that in, Long. I'm basically looking my expiration. I typically like to trade a week out. I like to trade the weekly options, a week out or maybe 2 weeks out. Currently, the current option period ends tomorrow. It's the 19th, and then the next one is going to be on the 26th. So I'm really only looking to sell options that are either a week or 2 weeks out. Not much more than that. Why? Because I want to recycle my capital. I want to go in, buy the shares, sell the option, hopefully get taken out of that option, make the profit, and do it over again. So that's kind of how how it does. I'm basically renting. I'm renting my stock. And as we all know, if you're a real estate investor, which by the way I highly recommend because I started in the real estate business, is those rents are really great, and you can rent your stock too. That's what covered call writing is all about. It's something that's definitely worth looking at. It's definitely worth looking at. This is the safest, surest way to make money in the options business is to sell covered calls. What do I mean by that? Well, if you find that there's a very rich option on a stock, you basically, buy the stock, sell the option, and then if it goes up, great, you get taken out of that stock. Hooray. You make all the money. If it doesn't quite go up as much, well, you still win because the option expires and you keep the option premium. And if it goes down, you protect yourself on the downside by using stop losses. And if you do this on a regular basis and you only choose, trades that'll give you, more than 100%, and you use margin, you can turn your account potentially into a money machine. That's what I do. I get in there, I get in the morning, I find out, I kind of look, see what the best options are paying. I then figure out a strategy to sell them. And that's what I do again and again. So it's not hard. And what I do is I put, if you get on the trade alert list, I'm going to be more disciplined about getting out my trades on this list. So, anyone can do it. This is not, it's harder to be it's hard to be a good engineer or a good doctor than it is to do this. This is actually one of the easiest things. This is one of the easiest things out there. Is it totally easy? No, but once you learn it, it's like riding a bicycle, man. It's not that hard. So I'm going to go over here to see some of people on TikTok. Thanks, man. Thanks, Arnold, for tuning in. I really love the fact that you're dropping by. Hopefully, I can help you make some money. What's your view on RPX? I'm sorry, RPRX. Good question. Let me just pull that chart up here really quick. RPRX. Let's take a quick look at it. See if I've got a good quote on that. Yeah, Royalty Pharma. Okay. Wow. It's up really strong. Wow. What is this? Acquires pharmaceutical. This is interesting. Okay. Well, this is interesting. Okay. I don't really have an opinion on this one because this is such a new issue. It hasn't been really around long enough to develop any kind of any kind of opinion. But wow, I like the fact that it's up 11.43%. I probably wouldn't be in this one just because it doesn't probably have the kind of options on it that I'm looking for. I'm always looking for options, especially to sell options, because I make a lot of my money as covered as writing options. I've been selling Tesla options now on and off, basically on a weekly basis, picking up anywhere from 3,000 to 4,000 each time I do it, with regularity. So, but this one, I don't have an opinion on this one. Let's look at the number one in the category, PW, see what that looks like. Power REIT. These are mostly blind pools. I think this is about, Power REIT. Wow. Wow, look at this. 112 miles of railroad from Pittsburgh to, isn't that interesting? Wow, this is a really interesting one. I didn't even know about this one. You might want to write this one down. Power REIT at 3114. This one looks like just a crazy, interesting one. This is really interesting. I've never heard of this one. Okay, yeah, this is a very interesting real estate play. I like these kind of plays that are kind of offbeat. This actually owns a connection for a railroad. It only owns 112 miles of railroad, and yet it's number one in this category. Wow, that is look at its chart, super duper chart. Let me see if I can blow that up a little bit for you on that. PW, that is fascinating. Okay, I know that we started looking at the other one, but it's funny. I love doing this because I get so many great ideas when I'm looking up these stocks that I would never have thought of. Now this is a good one, Power REIT. Look at this chart. Look at this chart. It's just moving very, very nicely to the upside. And I've never heard of it. Nobody's ever heard of it. It seems like a relatively thin issue, but there you go. Wow, that is very cool. That is very cool. Let me just take a quick look here. Is there 50 cents? Wow, American. Interesting. American Tower. That's another really good one. If you can do a play on that one. Now this is a very small issue. This is a little bit under where I like them. Only 35,000 shares being changing hands. Not a lot, but it's being accumulated very strongly. A+ on that. Wow, look at that. Isn't that interesting? PW. Put that down in your watch list. That is a very interesting stock. Wow. Okay. Sorry. On the other one, on the other one, I just would have liked to have given you a little bit more information on it, but it's just too new an issue. It's just too an issue. RPRX, it's just a little bit too new of an issue for me. It just doesn't have enough history. Not necessarily that it's bad, but it just doesn't have a history. I want to go back to that one and just kind of take a look at some of the things on it. Okay. Yeah. Royalty Pharma. Okay. So this is a company that buys pharma royalties. That's very interesting. But it's a REIT. Isn't that interesting? I've never. Oh no, that's the other one. That's RPRX. Yeah, there's just not enough data on this one. It's just too new. Sometimes you can do very, very well with these, but this one, I think that this one it's just a little bit too new, and so I really don't have an opinion on it. But thank you for bringing it to my attention. I do appreciate it. All right, so let's see. I'm holding, wow, almost 17% is a possible bounce. Okay, this is why I always, I'm sorry to hear this, Christopher, because the thing about holding losers is sometimes they will bounce back, but this is something, and this is kind of the tuition that you have to pay when you learn to trade stocks. Is you just don't want to hold on to losers, and I'll tell you why. Because it's every point that you go below 7 or 8%, it becomes much more difficult to recover. It's going to take you almost an increase of 35%, about 30 to 35%, to get back to even where you are now. Here's what I would do. In the case, I wouldn't hold this. I would sell it immediately. And I know that I know that's not what you want to hear. Believe me, I did this a lot when I started. I just wouldn't sell my losers. I would be like, and my brother's still like that. He's held some stocks. I think he's held Oracle at one time he had Oracle for 10 years. Why? Because he refused to sell it at a loss. Well, that's dead capital. I mean, and he could have taken that money and he could have enjoyed it. And so that's why I'm all into cash and trying to turn over stocks for cash. Here's the thing. Just wanted to, put it out there. If you're down more than 8%, sell, and then take the money and try to reinvest it. You're just going to do better. You're just going to do better. Hey, wow. Okay. Wendy from, wow. Okay. Hey, well, Wendy, you're on Twitch. Wow. I actually, people watch me on Twitch. This is incredible. Yeah, I'm loving this. I just started broadcasting on Twitch. I'm on Facebook. I'm not Facebook. I'm having trouble with Facebook right now, the feed. But YouTube, Periscope, and Twitch seems to be coming through for me. So I'm really happy that I'm on Twitch now, and it seems to be working. So wow, thank you so much for looking. I really appreciate that. Okay, so let's see if I can get some other questions here. What's your view on? Okay, let's see. What do you think about Kroger? Okay, Syed, here's the thing about Kroger. It's a great place to shop. I mean, as I say, I shop there, basically all the time. But I'm not so sure it's a great investment. And here's my reasoning on that. And I'm gonna go over to KR here. My reasoning on that is that there's just some stocks that they're great companies and all, but they're really not good trading stocks. And really, my primary idea here is to try to make cash on a weekly basis. That's really what I try to do with my holdings. And this one, if you're a pension fund, I think this would be a good one. But if you're just looking to make cash on a weekly basis, which is kind of what I do, I wouldn't be in this one. I just wouldn't be in this one. It's just not the one. If you're going to be in the the food space, the retail food space, Sprouts Farmers Market is the where you want to be, because this company is smaller, but it's gaining share. And now it doesn't have really an excellent chart. I wouldn't buy this chart, but it's got a 95 composite rating, and that's a very good thing. It's also $23, which is less, and this has a chance to go higher. So if you're going to be in this area, you just want to be in the ones that are winners. The stock market is very unfair. It pays the winners tremendously. It's kind of like the NBA. You got the guys in the NBA that make all the money, and then everyone else not so much. And that's kind of the way it is with the stock market. Really, is that you get most of your money in your very fewest stocks. So that's why I'm always looking to find something that is is moving up. I mean, that's just the way I go. Okay, keep preaching on. Stop losses. Almost kind of got in a pump and dump. Same way stop loss. Right on. Right on. Thank you. Thank you. Look, I know that people hate this. It's a broken record. You get excited about a stock. I get excited about a stock too. It's kind of like you got to be Dr. Jekyll and Mr. Hyde when you buy stocks. On the one hand, you got to get excited because if you wouldn't buy anything. You just buy the indexes. And a lot of people do that. They just buy this SPY or the QQQ, and that's great. On the other hand, once you start to buy it, you got to say, "Wow, what if this thing goes down?" So that's why you always set your stop loss. So it's like you make the decision to buy, and then you make the decision, okay, I'm not going to take any more than this loss. So people, it's funny. My girlfriend talks to me about this all the time. She says, "Oh, you're so negative." Well, yeah, but you got to be negative somewhat because you always got to you got to cover your downside, and that's really it. Man, I have a question on Roku. Roku? I love Roku, and as a matter of fact, I am not for stock. I don't own Roku currently, but I want to get a Roku channel. This is what hopefully I will have. I'm trying. I mean, to get this done. Yeah, it's down a little bit today. It's moving nicely above the 40-day moving average. I would want to see some more conviction in this before I would buy it. But let me show you the chart and show you why I'm saying what I'm saying, so that you kind of can see this. Here's the thing about this chart. As you can see, it moved up very, very nicely in February. This is exactly the same time that everything was closing down. This was the big coronavirus close down thing. So everybody was home watching the Roku, and I was too. And then, of course, it kind of went a little bit down, and then boom, it comes right down to the 40-day moving average. Okay, now it's basically in a pattern, as you can see here. Okay, I won't buy this until it comes up to the 136 level. Why? Because I want to see it making a new high. But this, if you look at it closely, it almost resembles a cup with handle, but the handle's kind of long. So it's not really a true cup with handle, but I do think this is a powerful stock. Now, would I buy it today? No, because I would never buy I never buy on a downtick. What this says is that, it went down today. Why? Well, let's see. There's maybe a reason. Let's see why. Let's take a look at the statistics and see why this might have moved lower today. So, okay, here's the thing. Okay, it looks like it may have just reported. I'm not sure if it's what the report's from. Okay, earnings per share. Well, this isn't good. 400%. So, pre-tax margin is going down, 52 rank. So it is having issues. It is having issues. I've been in Netflix. I'm currently, just for sake of discussion, I have a contract on I have a 440 option on Netflix. It looks like it's going to cash out on Friday. I went in at about I think 433 was my price. I'll make 7 on the up, and then probably a little bit on the option. But that's kind of what I do. You can see the vast difference between the Netflix, even though they're only separated by 3 points. You can see the vast difference, Netflix being the top. And I just want to show you the chart on Netflix as opposed to Roku. But I still like Roku. I'm not a buyer. I want to be on Roku. That's my goal. So let's look at Netflix. See what's happened. Oops. It's Netflix. Netflix. NTF. You would think I would know how to. I don't know. My spelling is horrible, it seems like. Anyways, but no, I wouldn't be a buyer of Roku at this point. I would be waiting a little bit on Roku until it showed a little bit more conviction. Wow. Okay. Nice. Great. Thank you very, very much. Excellent. You made some money on Netflix. You'll see. There you go. There you go. Excellent. Made 460. Okay. This is what you want to do, man. This is the joy in trading stocks, is making the quick money on the stocks. And you can definitely. Netflix went up, and I've been in it basically for 2 weeks. I will be out of it on Friday, but congratulations, and happy trading, man. That's excellent. I love to see that. I love to see the fact that you made that money and you made that quick money. So there you go. Exciting. Do you ever have? Wait a minute. I'm trying to look around something. A broadcast industry stock. Do you think of an X? Here's the thing about broadcast industry stocks. Right now, I think that the best one out there is probably Liberty Media, but let me just take a quick look on that. It's either Salem Media or Liberty Media. Let me just see Liberty. Let me just see if I can see Salem. Salem Media Group. I think that's probably one of the best in the broadcast area. So let me just take a quick look. No, okay, no. I'm giving you bad advice here. No, NXST is the number one in the broadcast group. That is Nexstar Media. I like the chart, but I think you better wait. You need to wait until it shows a little bit more conviction here. I'd be in this at about $100. Currently it's trading at 86.18. Now that sounds so weird. Why wouldn't you buy something if it was on sale, if it was lower? Why would you wait until it went up? Well, the reason that you do that is very simple. You want to make sure that there's conviction in the stock before you buy it, because you're really not buying it to own it. Remember that. You're not buying it to own it. You're buying it to resell it. And as you can see, it's moved up and then it's moving down here a little bit. But if we see some strength here and it continues to the new high, we want to buy it from the new high up. That kind of gives you a little bit of downside protection just based on this chart pattern. So anyways, I would be looking in the media group at Nexstar Media. That's the one that seems to be the most top rated. I don't know a lot about the group, but just based on the chart, and that's sort of how I would be looking at it. WLTW. So let's look at WLTW. I just want to take a look at the chart on this one. WLTW. And that is Willis Tower. Boy, I like this one. Okay. American Tower, Willis Tower, Crown Castle. These are all in the same group. I like this group a lot. This is this what I think it is? UK Broker of Insurance. Okay, I'm sorry. This is wrong. I thought this was the Willis, I guess the Willis Tower. I for some reason I thought this was in the same group as American Tower, but I guess I'm wrong. This is actually an insurance company, a reinsurance from Aerospace. Okay, well, not a bad area. Definitely up very, very strongly today. Comes right up onto the 40-day moving average. So that's looking good. But, again, in the insurance space, I think you really want to go with quality. And according to this, I don't see why this is a better stock. I really don't. Okay. Health insurance brokers. I don't know. Insurance doesn't really, let me see what AIG is doing. You just see, the insurance area can be very good, but it also can be, boy, look at American International Group is cheap. Whew. Let me see. Okay, let's look more for diversified insurance. Okay, this is what okay. Now, this is the kind of company you want to buy. Yeah. Palomar Holdings. This is a lot better stock. All the way around than Willis Tower, WLTW. I don't have anything against Willis Tower, but why buy a stock like that when you can buy a stock that has a chart pattern like this? This is the kind of chart pattern you're looking at, that you want to look at, going from the lower left-hand corner up to the upper right-hand corner. This is showing strength, and you can see those bars there too. So I like this one. It's a 98 composite rating, down a little bit on volume. It's not a huge volume leader, but 128 up today, 1.55%. I like Palomar Holdings better than the one that you recommended. But that's just my view on it. So let's see if I can get another one. Nexstar. You know what? Here's the thing, I think that there's better play with Siri. This is the one I like because Siri XM. This is a company that's very, very cheap. But unlike a lot of the other ones, it really has strength. It really has legs. It's only $6. I normally don't recommend stocks under $10. I'll be straightforward. But this one you could make some money on, I believe, because it does have. They bought Pandora. They've got a lot of users. This one I think has legs. It's Siri. It's up 2 cents after. It's not a whole lot, but it's still very, very inexpensive. It's a very, very inexpensive site. Normally, I don't recommend inexpensive stocks, but they do have a good user base. So let me see what's number one in that group. This is the satellite group. Yeah, look at that. Wow, that's too expensive. Cable One, nice if you're a mutual fund. Yeah, $1,807. Okay, it's a better stock, but I think I'll go with Siri on that one. Just my opinion there. So there are you can get deals in stocks that are under $10. You really can, but be much more selective when you're doing that, because it's fraught with more risk. The cheaper the stock, the more percentage move it's going to move, but also to the downside too. So you got to be kind of careful on the less expensive stocks. But Siri, the thing about Siri is that they issued way too many shares initially. It went down and then it was recapitalized. So there might be an opportunity there with SIRI. I'm not in the stock currently, but let me take a look at FCX here, just real quick. And that, Freeport. Okay, this is an interesting. Okay, Freeport McMoRan is a very interesting stock because it is a proxy for the overall metals and mining industry. Okay, this is a tremendous company, and I like this chart. I really do. Look at it. Again, lower left-hand corner to the upper right-hand corner. That's the direction you want to be looking at. It's above the 40-day moving average. That's also very good. It's close to its all-time highs. That's very good. So it's got 3 check marks. I only try to buy stocks on decent patterns, because the patterns will not lie to you. Now, the only bad point about Freeport McMoRan, everything else is good. It has nothing really to do with the stock itself. It just has to do with the group. The composite rate is 35 because of the group it's in. Now, the number one ranked stock is obviously Rio Tinto. This is a copper miner, huge company based in the UK. But it also has a wonderful chart too. This is 57. So I like Freeport McMoRan. I mean, it's a $10 stock that's really, really good. But again, I'm a little bit skittish when it comes to my capital. I like to keep my capital intact. So I typically like to buy the better in the group, and that's Rio Tinto here. But again, Freeport McMoRan is good. It's got a very good chart, and it's a good company. This is number one. Now, the reason Rio Tinto is better, of course, it's got a higher composite rating, lower debt load, and higher revenues, I believe. Yeah, okay. Here's the thing. Also, when you're buying a stock like this, you're going into a stock, try not to buy it right before earnings, because the earnings can very much skew. You can get either a rapid movement up or rapid movement down. I'm going to be talking in the near future about an options play that you can use, a bear call or a bull call spread, where you don't actually buy the underlying stock, and that's what you do on earnings. It's going to be announcing on 7/29. So this is one you want to put in your watch list, and you want to put it on your calendar, because hopefully I will have some options plays for you where where you have a 70% chance of winning when it goes through its earnings. So, but Freeport McMoRan, I definitely like it. For the price it is, it's a fabulous price considering its value. I'm not, my only concern is the group that it's in. That's nothing that I can do about it, because I don't typically like to buy in the lower end group. Two Cows, one of my old favorites. I remember this company before it was public years ago. Not a bad chart. Look at that. Not a bad chart. 58. I'm amazed that it's that expensive. But look, it's almost no volume. Almost no volume. Here's you could definitely move on this. This is too thinly traded for me. here's what I'm looking for in a stock, and I always check this before I go into a stock. I look to see what the volume of trading it is on a day, and that's a very important issue because if stock trades less than 1 million shares a day, then there can be liquidity issues, and you typically get these things like short unwinds and that kind of thing. This is a little bit too small of an issue for me in terms of where it's going. It's got a good chart though, and it looks like it's going to have earnings in August. Okay, its return on equity is 17%. That's not bad. For an internet stock, it's not bad. I just think that there's better ones out there. Let me check what the number one leader is in the Digital Tribune. Okay, this is a better stock here. I'm sorry. Instead of Tucows, I love Tucows. I used to download a lot of stuff from them years ago. Here's a stock that's a little bit better. It's got the right volume, 1.5 million, $10.21. Digital Tribune apps, APPS apps. This is a better chart. This is a much better chart than Tucows. Nothing against Tucows, but why not buy quality if you can? This has got earnings per share. This is nice. One of the things you're looking to do, at least I've found, that stocks tend to move much higher if they have the right chart pattern, of course, but also if their earnings per share is up, not price to earnings ratio, earnings per share. And this one has that. Its earnings per share change last quarter, 67%. That's extremely healthy. 3-year growth, well, it doesn't have any 3-year growth because it hasn't been around that long. But the current year, it's up 85% in its earnings per share. This is the kind of thing that you want to be going in right when they get into this sort of hyper growth stage. Because as you know, the way it works in a company is that for a long time, it just goes along and they're making everything happen. Then in early adoption, that's really when you want to buy it. And then you want to sell it when it becomes in general adoption. And it looks like this one is sort of in the early adoption, moving into the general adoption phase of its life cycle. And it's at $10.99. That's good. It's down 21% today. I like this one better than Tucows. But I do like Tucows. I've used Tucows before, and I recommend the product. Years ago. I mean this is like, ancient history on Tucows. So let's see. If I've got somebody here that I can answer a question. Thank you, by the way, for everyone that writes in. I really appreciate it. Roku has a rumor of being bought by Google. Yeah, okay. Yeah, well, that would totally make sense, actually. I don't know if it's true. I don't have any. I have no insider information. But you know what? That would be a strategic buy by Google. That makes a lot of sense. Thank you for bringing that up because, that would make a lot of sense. Google TV just never really worked. I mean, they had their dongles and they had all this stuff, but Roku is going to be built into every new television set. So it's kind of like the Dolby of the future. That's why I want to get a channel on Roku before it becomes impossible for people like me, because I'm just a little small guy out there amongst the big guys. But Roku, that makes a total sense. Let me just flip back to the Roku. I want to look at the chart again. That's very interesting insight. Thank you for that. That it might be an acquisition target by Google, and if that's true, okay, no, it's down after hours, so I'm not. I don't know. Okay, that would be really interesting if it was. Let me just show the chart here. Pull the chart up. Yeah, there we go. See if I can. See if I can give you the full screen chart. Screen chart. There we go. Get that. All right. Okay. Okay. There it should. Okay, there we go. Well, let's look at the full screen chart here. Yeah, there we go. And that looks pretty good. So, just wanted to get. This is the chart of Roku, and I do really like the. Okay, here's what's happening. This is a cup. This is a handle. This is moving higher. Yeah, even though it's down today, I wouldn't buy it. Don't buy it on a downturn. Don't buy it on a downtick. Buy it on an uptick. but I think that this one may have legs. I really do. There was definitely, it looks like there was a spike here yesterday. Okay. Anytime you see action above the 40-day moving average on the volume, that's something you should take a look at that action. Okay, there was a gap up. It's come back down to the 40-day moving average. Okay, this is going to bounce. Tomorrow, this is more than likely going to be up, and it may be up all the way. I don't think it'll go up the way up to the 200-day moving average. That's this black line here, but I think there's a really good. Yeah, this is gonna pop probably tomorrow, but don't buy it on a down. Don't buy it don't buy it as when it's going down. Wait until it starts to confirm with an uptrend, and don't try to buy it on the bottom because it's just next to impossible to buy something at the bottom. It really is really hard. Anyways, okay, so that's great. I appreciate that for Roku. All right, so let's see. All right, well, I've been on almost 45 minutes, wasted your time for 45 minutes. But if you want to get my stock alerts, really, I'd really love it if I could send them out to you. And, I do several things. I kind of have a two-pronged trading strategy. One, I try to generate income, cash on a weekly basis, and I keep track weekly and monthly because that's how I make cash. And then also I do some position trading that's more long-term as well. But a lot of my alerts are based on doing these quick trades that hopefully will make some cash for you. So that's really the key. By the way, hey, yeah, definitely, Syed. Love to see you here. I'll be here, of course. And it's at Preston and McCallum, 3rd floor. And we got some more tenants since you moved out, since you saw us. I hope that your family is good, and I look forward to seeing you. All right, fabulous. And by the way, if you're ever in Dallas, just drop by and say hello. It's Dallas Trading Floor at 17920 Preston Road, and that's in Dallas, Texas, 3rd floor. And we're at the corner of McCallum and Preston Road. So if you'd like to stop by, please do so. And love to see you. All right. Well, I don't have anything more for you today. If you could, sign up over those alerts. And any questions, just if you could, email it to me through the website, www.dallastradingfloor.com. And I'll try to get you an answer out as quick as I can. Happy trading. I hope everyone. Oh, wait a minute. I do have some more. Oh, BAC, Bank of America. Snap. Oh, Snap. I like. Okay, so let's look at the chart on Snap. I do like Snap. I have to admit. I think it's got some legs. Let me look at Snap here. Yeah. Give you a good quote on that. Yeah. Okay. Oh, yeah. Yeah. This is strong. Yeah. This is a winner. Okay. It's after it's up. Okay. Okay. Yeah. Great call, by the way. Is that Philadelphia Flyers? I like the Flyers. Yeah. This is a good call. This is a really, really good call. This is a great chart. For everyone out there, just kind of chart reading 101. It's believe it or not, this is just so easy. This is not really that hard to do. Once you get into the kind of the rhythm of it, it's not that difficult to read charts, and it's very, very profitable to do so. So let me get back to the banner, click that so we can get a full screen on this chart, because I want to really kind of go over the chart a little bit, because I think it's very worthwhile in taking a look at it. All right, this is the chart of Snap. This is, of course, the $20 line here. Obviously, we went, all this, you're going to see this in all the stocks. We went down. This is this is sort of, at the end of February, the market started getting funky. This is why when a stock goes down and it hits the 40-day moving average, it's best to sell it, because typically what will happen is it'll bounce and it'll go lower. So when you see it moving through a 40-day moving average like this, you want to sell it, because if you use the 7% rule, you'll be selling it about here, and then it'll go all the way back down, and then maybe it'll come all the way back up, but it's very hard for it to get back up. So this is the reason you use the sell rule, especially when it collapses through the 40-day moving average. This is a really important line. So what I like about Snap is, look, since the beginning of the coronavirus thing, it has just been moving up, 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 up. This is a really good chart. This is a really good chart. There was a spike, and then it moved higher. And by the way, this is another thing that you want to look for in a chart is when the 40-day moving average crosses and moves above the 200-day moving average, okay? That means that the growth, the action is accelerating, okay? If it goes the other way, this means that the growth is decelerating. It's really interesting. So this is very, very bullish. This is a very bullish chart pattern. So I would definitely buy this one. Thank you for this. I hadn't watched Liz's Snap, but I think I will. This is a powerful chart, and definitely one that I think you could really, really benefit from. Great. Thank you for that. Question on Bank of America, BAC. The thing about the money center banks, I don't think that any of the money center banks are going to go out of business. But Bank of America, Citibank, they're just not where I'd like them to be. This is okay. So here we go. And I appreciate this question really a lot because I think it's very instructive. There are basically 6 money center banks that you want to be looking at. Of course, Wells Fargo. Everybody knows about Wells Fargo. J.P. Morgan Chase, Bank of America, Citi, Mellon, and then Morgan Stanley. And as you can see, MS, interestingly enough, is rated number 1, not Bank of America Group, even though Bank of America has more branches than anybody else. Now, I don't like the finance sector because with low interest rates like they are, as we all know, I mean, it's great for buying a house, but not so much when it comes to lending the money. It's tough to make money when the rates are as low as they are for qualified borrowers. So this is the reason I don't really like the banks at these levels. I want to see the interest rate. I want to see more inflation before I like the banks. But if you're looking to be in the bank sector, Morgan Stanley is where you want to be, and not Bank of America. It's just, it just comes down to the exposures that they have. Morgan Stanley has a better exposures than Bank of America does. Nothing wrong with Bank of America. Bank of America is an extremely well-run company, but I just don't think they are the best place to be if you're looking to trade them. I don't think it is. Come on. Okay. Let's see. Okay, so video not working. Ouch! I am so sorry. Is it working now? I'm hoping. I'm showing that it should be. Man, I tell you, I've got to get better. Your video is still not working. Wow. Okay, let me see if I can come back in really quick.